Hi everyone, this is Joe Hentges with Beyond the Chart, and this is a stock market education teaching moment. How does support and resistance work? We're going to use Goldman Sachs and look back at late 2009 into 2010 and look at some of these support and resistance points. The first one, you can see what I do is I create dotted lines across the top where there was resistance came in, selling came in. You can see I did that here and here, and then when buying came in, it was a floor or support. So think of support as a floor and resistance as a ceiling, okay? So then when you sell off and you don't get the support, the floor breaks, then that tells you that the sell-off is pretty weak because you're expecting to get some support in here and it didn't come in. Well, then what happens is once that floor is broken, what was a floor becomes a ceiling. Okay, it has the potential to. It doesn't always, but as you can see here, it is. So, and why does that happen? It happens because the people who failed to sell here, when the price gets back up to it, they sell and they drive the price back down. And then it happened one more time. And so you had a couple points in here that were points of resistance, okay? So now you had it. Actually, what this ended up forming was an ascending triangle. Here was a horizontal top and here was the rising trend line, okay? So there was an ascending triangle. And what I do is I created a parallel line to this line here, put it from the start of the triangle and project it out for a potential move, and sure enough, it goes right up and hits the line, okay? Now, where is the top coming in? The top's coming in this resistance zone where I had these dotted lines across the top over here. It hit the first one, then it sold off, came back up, came right into the zone, started to get a little resistance, broke up through the top, but then when it doesn't hold, you got a sharp break in here because the buying did not hold in this resistance zone, and you got a break and you move down pretty sharply. So now you're in a downtrend, and here's some little minor resistance points that happen at the bottom of this gap. Okay, here was a gap in price, and then it came back up and it sold off. And the other point I wanted to make by circling this congestion, this consolidation in here, many times when you have consolidation, the middle of that consolidation will become a resistance point. And sure enough, when you draw a dotted line through the middle in here, this is exactly where selling came in as they tried to rally it, and then he sold it off. Okay, now that's, and then here's when I took this dotted line all the way across. Again, it's a potential resistance zone. The resistance actually came in just slightly short of that. Sold it off, and then it rallied back up and didn't hold as a floor, didn't become a solid floor, and they broke back through and took it on down. So those are just some examples. I think we had a couple more over in here, but it's a similar thing. Basically, resistance, creating a resistance zone, dotted line out to the right, and that's where the potential when the selling comes in, you start to get buying support that comes in the previous resistance zone. So what was a ceiling becomes a floor, and vice versa. So that's it in a nutshell, a little bit of an example of support and resistance and how it works. This has been Joe for Beyond the Chart. Thanks for stopping by.